Hello, my name is Nick Quinn.
And I'm Shane Vernier.
And I'm Connor Woods. We are the market analyst team at howtotrade.com, and together we're going to explain everything you need to know about trading the three black crows pattern. So let's get started.
The three black crows candle pattern is quite a rare candle formation in price action. We would tend to only associate it usually with the stock market. It has three bearish candles in a row, and each open has to occur below the open of the previous bearish candle, which implies the gaps in the trading sessions of stock markets tends to be a way that we would then formulate that on a daily time frame. So that it tends to suit longer term traders in that sense. But it is a very valid pattern if you spot it, and it is highly tradable. It's showing us a reversal. So let's break down exactly what you need to see in the price action to identify this properly. You can see representation of the three black crows here. It's these three candles, 1, 2, 3. They are the candles that make up the sequence that gives it its name, the three black crows. And it's a reversal structure. We're looking for an uptrend to basically reverse to the downside. Now, you do get a very distinct look from this particular pattern because it's each candle in the sequence is a bearish candle. Now, if you remember what I said about the stock market, we tend to get gaps. So each open needs to be below the open of the previous candle in the sequence, and also there can be a gap between the close and the open of each candle as well, which is why it's so common in the stock market. But that is the basic overall structure. From a trading point of view, you would look to short the actual close of candle 3, and your stop placement would be above the high of the first candle. But that is how we would correctly identify them in a price chart.
Okay then, so let's have a look at how we can trade this three black crows candlestick pattern. And as with all reversal patterns, the three black crows signals counter trend trades to us. And in this situation, we're looking for this formation to appear at the end of an uptrend, and we just need to find that market entry, stop loss and profit. Now you can see this market at the moment is trending to the upside. We're in this bullish trend. And what you notice when I get my drawings back up on the chart is at the end of this uptrend, we get this one last push higher. We can see we're trading higher, bit of price consolidation, one last push higher, then we get 1, 2, 3. That's that black crows formation coming into play. Short wicks, solid candle closures. Now that also helps us to create this V shape that we see, this upside down V shape that we see in the market coming into play. And essentially what we want to do as traders, if we're going to trade it, is wait for the neckline to be broken here. Once we get a break below this neckline from this third candle, that's a signal to us that the momentum is really starting to shift. So we'd enter theoretically at the closure of that third candle with a stop loss above the first candle. And then if we wanted to say we wanted to target, say for example, these lows down here that you can see, which would have been a solid low to target, you can see that that was hit, and that's around a 2.39 risk reward trade. So that's a fantastic way we can actually use those three black crows candlestick patterns.
Okay, let's take a look at a few of the key pros and cons for the three black crows pattern. On the pros side of the ledger, the three black crows are easy to identify and trade, so they're very easy to spot in the live market. Also, the pattern occurs frequently on all Forex pairs, commodities, and shares, so no matter what market or time frame, you should be able to find a three black crows pattern to trade. And lastly, the pattern is ideal for trading reversals and entering new trends, so it gives us fantastic trade location on brand new trends. Now, on the cons side, the three black crows may produce false signals in consolidating market conditions. So when the market flattens out, it can be a challenge to trade this pattern. On the daily, weekly, and monthly time frames, trading the three black crows can be expensive. The ranges are a bit larger, and your stop loss location is going to be a bit more extensive. And also, the three black crows pattern can set up a late market entry. So sometimes you miss out on a fairly good trade while waiting for the pattern to form. Now, let's review some of the key takeaways from the three black crows pattern. Number 1, the three black crows chart pattern is a bearish reversal indicator. It consists of three negative candles that form during an uptrend. Number 2, the formation is used to identify selling opportunities in currency pairs. Number 3, to trade the three black crows, a sell order is placed beneath the third candle of the pattern. A stop loss is placed above the pattern with profit targets located below. Lastly, the three black crows frequently form in all markets on all time frames. Now, if you want to learn more about the three black crows pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you exactly how to fit the three black crows formation into your own trading methodology. We'll then demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to practice and gain valuable market experience trading the three black crows pattern. Then, once you're ready, feel free to join our How to Trade Funded Trader program.